Scott Kidd joins me here today. You can go to investwithscottkidd.com, investwithscottkidd.com, learn a bit more of what he's up to, but really appreciate your time here, Scott, as we talk about some multifamily investing. But we're going to kick things off talking about your background a little bit because it's fascinating. You've been working on ships for most of your early life.
Well, first of all, thank you so much for having me and taking the time to speak with me today. And I've been actually working on yachts for 25 years. I've been a yacht captain for 20 plus years, but it's a career that I've been passionate about. I love it. I love what I'm doing. And it has grown into a multifamily real estate. And I found that I love that too, because it's pretty similar, very team oriented. It's a people business. All businesses are people businesses. And it's a lot of fun. And with real estate going pretty well for me, it also gives me the option of when and where I want to be on the boats. And it's been really great I'm lucky enough to do two things that I really love.
Sure. So, are you still doing that today?
Yes, I do 6 weeks on, 6 weeks off. Right now I'm off. I'm home in Florida, but I tell people I work 6 weeks on, 6 weeks off on the yachts, but then I do the multifamily real estate pretty much 365 days a year because I'm kind of a junkie.
Yeah. That seems to happen to a lot of people.
Yeah, it does. I try to put it down and turn it off sometimes, especially when I get the eye rolls from my family.
Sure. So it's like somebody who recently gets into like keto or
Yes.
a vegetarian, and all of a sudden they got to preach to everybody.
Yeah, they're CrossFit.
Yeah, exactly. So talk a little bit about how did you find your way into the real estate investing? You mean you're out on water? There's not a lot of real estate out there.
Well, I was lucky enough, the first captain I worked for, he told me you got to do something with the money. And he had done well with houses and stuff. And he said, you got to buy a house. You have money sitting there. You got to buy something to put into something. So I bought my first house. I got married and our family got bigger. We bought another house and we rented that one. A few years later, I learned about multifamily real estate from a friend of mine. He told me he had bought and sold a 46 unit in Houston, Texas, and had made in the seven figures, him and his brother. And I asked him, I said, well, you can do that? And he said, yeah, you can do it. It's not more difficult than what you're doing now with the rental property. So that kind of started my whole thing. And working on the yachts has always been a very volatile industry where, it's kind of a here today, gone today. The ownership could, have a dip in their business. They could get a divorce or they just could be not interested anymore. And then jobs go away. And then, we saw it in COVID and we saw it during the global financial crisis. So I'd always done something on the side, some type of side hustles or something. And I really liked the real estate model and thought it was going to be passive income, but it ended up being very active, but luckily enough that I ended up really liking it and got me to where multifamily, where I understood where it could kind of gauge it to where I could still work on the boats and do a lot of things where I could work with certain teams and add value and stuff like that, where I can do that from pretty much virtually anywhere.
Sure. So that's really smart of you to recognize the instability of your employment and trying to add some passive cash flow to kind of even things out a little bit.
Yes, it's something that's really been great for me. And now I wanted to pass on to a lot of other people because I didn't know about a lot of these things. I want other people to know that they can do that. It may not be real estate, but it may be some other type of passive cash flowing business or asset that can give them those options and opportunities that they can have that fallback. Because it's not a matter of if the job goes away, it's when. You want to have a little bit of a cushion so you don't necessarily have to take the next job that comes out. You can kind of pick and choose or go into something else if you so choose.
So how does this job typically work? The yachting piece of it do you work for a company that kind of contracts you out or are you employed by the yacht owner?
I'm employed by one yacht owner right now. I have done other jobs where I had yacht management where I managed multiple boats at the same time. At that time, it was really busy and it was just me by myself. This was before I knew anything about virtual assistants and hiring other people. So when I penciled it out, it really ended up, after all the payouts and everything, it was making about the same as working for one person. So I kind of just fell back on that because it was a lesson learned, but I did grow quite a bit. But the amount of hours I was putting in, and I wasn't spending as much time as my kids were young. I needed to spend more time with my kids. That was much more important for me at that time.
So it's kind of interesting. In my mindset, I would have thought that this real estate investing, you're hanging out with some really eh, wealthy people who are they own yachts and the
Yes.
like. I thought maybe you would have picked up the whole real estate thing from them, but you were picking this up from the other people working on the yacht.
Well, interestingly enough, the first captain's job I had, he was a real estate developer. He told me a lot about it and everything. And at the time, I was focusing on building my career and stuff like that. He would have showed me a lot, and he's since passed, but I've worked for their family on other occasions since. But it's something that people usually think that you can kind of go directly to this wealthy yacht owner, but it's similar to like a family office or private equity or something like that. They have many levels of vetting before you can get to them. Even though they're very wealthy, they probably have at least two or three guys that have their own real estate department of their investing. So to really, if they do like you, and they'll put you on with them, and then sometimes it can be a little awkward because those people might feel like you're stepping on their toes because they say, well, this guy's the boat captain. I've been doing this for 30 years. Why does the boss want that? And it gets to be a strange situation, but there's always multiple levels before you can get to that person. It's the same thing. They know me for, running and managing their boat and their crew and everything. They would easily give me several $1 million, not easily, but they can justify it a little easier, millions of dollars to put into the boat where I manage a refit or building a boat or, $20 million project, building a new boat, 50 million, whatever that is. But to give me money to build an apartment, well, we don't know you doing that. So it's kind of a new proof of concept kind of thing with them, unless they're really comfortable with me as, on the management side, or we have that decades long relationship. There are some yacht owners that I have those relationships with. Those kind of came through, so to speak, blood, sweat, and tears type of relationships. It's the same like any other large high net worth person. It just depends on what they know you for, really.
Right. So it'd be curious. Have you found like some skills that you learned in the yachting world that you've been able to apply to the real estate investing?
Yeah, pretty much most all of them, most of them are people skills, the management skills, because without a good crew, it's the same as multifamily. Without a good team, the property fails. Without a good crew, the boat fails. A lot of these things like negotiating contracts, we're doing that all the time. We're managing the projects. I built a yacht in China. That was a $20 million, 15, $20 million project, and which was a total nightmare, which I wouldn't recommend anyone doing, but it was a best and worst project that I've ever been involved with because I learned a lot. And, we learned a lot about international laws, trade, you know, there's so many other, managing vendors and contractors and, you know, managing the general contractor or the project manager and all those things. Those are the same skills that go along with what we do in multifamily. And it's all very interrelated, and I try to tell the rest of the crew when you do decide to step off, all the things that you've done here, a lot of these skills are transferable to any business that you're doing. They might try to tell you that they're not, or, you've been working on a boat, you don't know anything about, owning a restaurant. Like, do you have that high level of service that will actually transfer over to that restaurant or bar?
So, do you ever surprise people? I mean, based on what I've seen here, you've had syndications in Ohio, North Carolina, Oklahoma, some joint ventures in Florida, and this is likely a list that's out of date at this point.
Yes, actually, it is. We really only have North Carolina. We're working on some things in Ohio. We still have the 13 unit in Daytona, Florida. And I just signed on. We're doing some development deals in Dallas, and we have a couple of deals going on in Houston, Texas, which my folks live there. So it's an opportunity for me to spend some more time there, which I'm pretty excited about that.
So do you typically surprise your coworkers when they find out you're doing all of this?
Sometimes, yeah, when they start talking about real estate and stuff, it's kind of funny because when I tell people I invest in real estate, they usually think, oh, so you have your real estate license or you're selling houses or short-term rentals or something they can kind of relate to a little easier because they probably know people that are realtors and stuff like that. And as far as syndication and stuff, it's not as common. That can be
Right.
surprising.
So that's really interesting regarding this. I've seen all kinds of backgrounds coming into real estate investing, but yours is really unique in this fact.
Well, it can be, and I'm hoping to make it common by bringing in a lot more people that work on the yachts because my realization why I started the meetup group, Yachty Real Estate Investors, was to bring other people together, let them know that these are the options that you can do. And these are some of the options because a lot of the younger people, they're living on the boat. All they might have as an expense is a phone bill. So they can make and save up quite a bit of money pretty quickly. If you put that money to work in 10 years, 5 to 10 years, you could walk away with not really having to work so hard the rest of your life.
Right. Well, if everybody's interested, I'm going to direct them to your website again. It is investwithscottkid.com, investwithscottkid.com. If you found some value in what we're talking about here so far, do us a quick favor, share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. Well, I'm going to throw you a curveball here, Scott. What has been your biggest mistake so far, and what did you learn from it?
Biggest mistake so far was getting heavily into a project that ended up being a bigger project than anticipated. Maybe not seeing, well, you can't predict the future, but during COVID, this 8 unit that we had ended up being a lot bigger of a project. I mean, it turned out really well. We all did well financially, but it was really a lot of work because contractors weren't showing up, supplies weren't showing up, all those things. There was a lot we didn't anticipate, and it just kind of made me reassess what I need to do because I said, well, I'm going to work on the boat. I'm driving early morning, I'm going to the place and then going to work on the boat and then coming home. On the way home, I'm going to the property. So it helped me because it made me realize that I need to be part of a bigger team that I can focus on mostly investor relations, raising capital and putting together the financial side, the debt and the equity, because that I can do from anywhere and I can do that on the boat while I'm working. I just have to get up earlier and maybe stay up a little later and field calls and stuff like that. So, and I can do that when I'm home because it's something I can do from anywhere. And that's kind of what I've retooled to. And that was about a couple years ago now, which has been better. But that was also a steep learning curve too, because raising money can have its trials as well.
Mm-hmm. Oh, would you mind sharing? What do you mean by that?
The biggest thing that I learned was that all things are not for all people. And I kind of knew that already, but just because I think something is a great deal or a great opportunity, it may not fit somebody else at that point in their life. They might be getting close to retirement and they don't want to take on anything else, or maybe they're younger, they're in kind of in a accumulation stage where this type of project, they want to get the immediate returns a little quicker, whereas with a large, steep value add, you may not get any returns for a year and a half, 2 years, because it takes that time to do all the repositioning and everything else where they may not get paid out for a couple of years. And a lot of people may not necessarily like that, so that was the biggest thing that I learned is I just have to find, listen more and figure out what people want and then just bring what they want,
Hmm.
add value to what they need.
So you mentioned you host this real estate group. Was there one not in existence up until then? And you decided to create one of your own, or did you focus on that niche?
Well, there wasn't one for yet people that work on yachts specifically, and it's grown to a lot of other facets of real estate because I've since collaborated with a group called Like Minded with friends of mine, Eric Greenstein and Bobby Sharma. And Eric has since gone, he's going nationwide. We do Fort Lauderdale, West Palm Beach, and Stewart. Those are the ones that I help host. And he's doing Miami, Aspen, Colorado. And I can't remember all of the places that he is now. It's Like Minded Pro. And the reason why I started it was because I wanted to learn more about multifamily and commercial real estate. And I kept going to more and more meetups and RIAs and stuff. And at the end or during the whole meetup, they would just try to sell you something. At the end, they're funneling you to the back of the room and they'll sell your course or book, their, phone call, or mastermind or what have you. And that's fine. But I really wasn't learning anything and I wasn't really meeting anybody. And then I kind of decided, let me just keep going until I find what I need. And I ended up going to one and it was just people hanging out, talking about real estate and what they were doing and trying to help each other. And I said, well, there's probably more people in the yachts that would want something like this. So I kind of started it and it's kind of grown into collaborating with more people. And I realized even more that collaborating is so much better for everyone.
When you find the right group, what I always find amazing, especially in the real estate world, there's always competition, but it's
Mm.
really in a friendly nature. Most
Yeah.
people in the real estate world, compared to other jobs I've had, they're really willing to help each other out.
Yeah, it's a team sport, I mean, you can in single family and stuff like that, you can kind of do a lot of it on your own until you get to a certain point where you need to scale or unless you're going to scale with multifamily and commercial, you really have to have a team because you can't be an expert at all these things that it takes to close on this property and then operate this property and take it the full cycle and full term. You need all these strategic partnerships and strategic team.
Mm.
It's just not it wouldn't be efficient. You could probably do it 1 or 2 times, but it would be exhausting. A lot of details would probably fall through the cracks.
So you mentioned that you're kind of like, I think you said 6 weeks on, 6 weeks off, something like that. And
Yes.
you've had to scale accordingly. Like, what are some of the first things you did? Like, was it a virtual VA or what did you do to so that you had your bases covered when you're working?
Basically, what I did is it was a steeper learning curve. It took me a while to really figure out what I needed, and it's just been a slow growth process, but eventually it did come to hiring a VA, and once I get to when we're close a few more deals, and we'll take on some more so I can grow more. I've been doing some incremental growth because I don't want to grow too fast, or else that's going to, I think it might be too much. I want to definitely be involved where I can keep adding value. But if I grow too fast, I might miss some things that I think are necessary, but it's been a slow growth process, slow and steady. But I don't think there's, they always say it's a slow process. It's get wealthy slow. Not there's no such thing as get rich quick. I mean, you can win the lottery and stuff, but that's few and far between. And usually those people are broke after a couple of
Mhm.
years anyway.
Right. That's funny you bring that up because I recently saw Dave Ramsey had one of those guys who won the lottery call in looking for advice recently. That was interesting.
Nice. Well, I don't fault Dave Ramsey. His stuff works for him. I do some of it. I think it's very good to protect yourself in all ways. You shouldn't carry a whole bunch of credit card debt and stuff like that. It's just definitely something you should be aware of. But, definitely use leverage to buy property and buy assets that cash flow, provided they can cover all the debt and all the expenses and put some money in your pocket, then you'll be okay over time.
So you primarily are what markets are you sticking to? Do you primarily purchase existing or are you building? You mentioned something about some development.
Well, I just came on a few months ago with some guys we've been trying to put something together. And they put this together, these development deals. They've partnered with a development group out of St. Louis, and they're doing multiple projects in Dallas, southern Dallas in the I-35 corridor, which there's a lot of growth happening down that way. And there's just so much opportunity in that. On the northern side of Dallas, there's a lot of stuff that's already been built and it's still being built. But on southern part of Dallas down towards Austin and towards Houston and stuff, there's plenty of development to happen. Each one of them is 3 stages of about 120 units each, so that they can be built and leased up faster than building 300 units at the same time.
Sure. Well, Scott, this has been such a great conversation. I'm going to direct everybody to your website again, investwithscottkid.com, investwithscottkid.com. I saw that you even have a couple free resources like pre-departure checklist. What was that, and what caused you to put that together?
Well, it was just, I just wanted to come up with something that people would download as a free resource, something that I always look at when I'm looking at investing passively with other syndicators, sponsors, or funds, stuff like that, fund managers. It's just a list of 10 things that you want to look at. One of the main things that I do, because I'm an LP, limited partner investor as well, is definitely vet the sponsor, definitely vet the fund manager, make sure that they have, they don't have any properties that are underwater, or they have a good track record. They don't have any defaults and stuff like that. And if they do, why? See what's really going on there. Definitely no criminal activity. That's definitely a no-no.
Right. So that's Invest with Scott Kidd again. But Scott, before we jump into the rapid fire questions and close out this episode, is there any topic we should have tried to hit on here today?
I don't think so. I think we covered 2 topics I like talking about, yachts and real estate. So I think we're pretty good.
So have you ever thought about investing in a yacht?
If I needed all of the tax loss, yes. And once I get to the point where I need to have millions of dollars in losses, I will definitely buy one. But at this point, no, because it's a losing business. Everything we do on the yachts is a loss financially.
Well, if you're ready, we'll jump into the rapid fire and close out the episode.
Sure, sounds great.
So the first one is, what lie do real estate investors often tell themselves?
Sometimes you see the lie that they say that they've underwritten this conservatively. A lot of times we've done this conservatively. I hear that number, and all the people that underwrote all these deals conservatively, well, quite a few of them are now underwater and in trouble right now, which, granted, you can't see the future, but, we all say it's conservative, but do what it needs to make the deal work and to where it works for the investors.
Sure. If you could go back in time and give your younger self a piece of advice, what would that be?
Fail faster.
Okay.
Yeah, I would learn a lot quicker if I fit, because that would have meant that I would have tried more things. Yeah.
Do you have a book recommendation, or what are you reading right now?
A book recommendation, I actually have 2 books that I really like. The Go Giver, which it's just about, life is what you give, not what you get. And as far as Multifamily, it's The Hands Off Investor by Brian Burke. It's a great book just to learn about if you're thinking about investing passively. And it was great for me as a GP as well, because it gets me in the mindset of what the investor needs. And it's all about the investor and the residents.
And finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you in your business?
It has been Go High Level. It's a kind of an all-in-one tool where you can build your website, do your social media campaigns, email campaigns. You can build groups in there. You can integrate a lot of different tools with Zapier and stuff. I'm probably only using about 1/10 of what the capability is, because there's just so much in there.
Sure. Well, Scott, I really appreciate your time. It was great meeting you. One last time, investwithscottkid.com. You can learn more information there, but really appreciate it.
I really enjoyed it. Thank you so much for having me.